see is that you guys are really good at what you do. You're really enthusiastic, and also you're really passionate about your business. However, sometimes it feels like the numbers, the tax is the least of the worry, to be honest, in this discussion, are kind of a alien to entrepreneurs. Uh, Tell me if that's something you also guys feel that way. You're good at what you're doing. The moment it comes to doing any numbers or doing any decision making which needs number, like no, you just decisions are made on that basis.
Yes, I mean, I'm very conscious of it,
Yes.
and I have some degree of understanding, but not as much as I'd like.
Right. And to be honest,
Very
like
basic.
exactly. And to be honest, I actually, this is another reason why children are not taught financial, taxes, life skills in the school, and they are made overly complicated. Right?
Yeah.
Bottom line is this: if I have to say to someone, if you're living in England and you can't speak English, what would your survival and success rate is going to be in this country?
Pretty small, really.
Exactly. Business is same. The only difference is business is languages is numbers. And we're going to go through the journey, and obviously that those things I'll be going through to make sure that you guys understand that this is something you need not to be worried about. So again, I've been helping business owners like yourself. And the idea always there is, so if someone comes to me saying, Tajinder, I want to get my accounts and taxes done, I would say I will very happily do that, but I'm not the right person to do that because I will be then not giving you the best service I can offer, which is a lot more than just simply doing your account and taxes. And we'll see in the further slides how it actually, what I mean with that one. So the idea here is to help businesses grow, scale, not just by revenue number, because that's the most, I would say, misleading number, but the profitability and the wealth, which is basically how much actually the businesses are making when everything is done and dusted. And also at the same time, like majority of my clients want to invest the money in real estate. What it means is that then these guys are able to then diversify, if you want to call that way, from their normal business, which is doing fine, not a problem, but in a different direction, which could be a bit more of a as a safeguard hedge against any unseen for circumstances in the future or whenever. So usually they go for investments which are in real estate, could be in stocks, could be in other markets, but mainly they are in real estate, commercial real estate as well. Now, going to the next, basically, obviously, like how I know this thing, because thankfully, like I've been in industry for almost 30 years. I'm a chartered management accountant. And at the same time, I run my own mortgage brokerage firm. And also, I'm helping many investors with investment decisions. So it's not just basically, you know, we're doing this thing day in, day out. And thankfully, many of my you would say clients are very much in a better position where it started from. So coming back to the next one, I think my presentation has gone somewhere different. Okay, let me just see if am I back on the screen? Yep.
It's back to the first page.
Yeah, that's right.
Yeah.
So what we're going to be dealing with, the first thing we'll be dealing with, like most people think, I'm not a numbers person or finance person or something similar version of that, right? Second is going to be my accountant handles my finances. And to be honest, as I said earlier, there is a lot more going on than just what accountants do for you. And the third is most people think profit is same as cash, and it is not. And bonus thing is I'll be sharing a KPI dashboard spreadsheet with you. You guys can personalize it based on your business requirement needs. And that way it'll be very much useful to keep an eye on the most important numbers in your business. So before we begin, and this is for yourself to answer to yourself. I don't want any kind of like, no, or you don't need to say it out loud here. But would you know what your last month's sales was precisely?
Not precisely. I'm there within a few £100.
Okay, good.
Not precisely.
That's good. Would you know how much your sale was by product or by market?
Roughly.
Good.
Roughly. Again, not exact.
Not exact.
Roughly.
Do you know which products are the most profitable over others and what their contribution was to the total mix of the profits?
Again, I've got a handle on it, but it's not.
Right.
It's not 100%. It's an understanding.
Right. And to be honest, it's absolutely fine. And this is what happens when we're not looking at the dashboard. So you're just driving a car without a speedometer. You have a bit of an idea that you're probably going 30 miles an hour. Unless a camera flashes and you say, okay, it was about 40 miles an hour, or you're in different zone of what altogether. But nothing to worry about. This is something like we'll be discussing and telling you why these things are very important when you're running business. And going to the next thing is, so if someone say I'm not a finance person in my business, my answer to that is very simple. You are a finance person in your business. And people come to me, say to me that I'm an engineer, I'm an architect, or I'm whatever their profile or their profession might be. But in many circumstances, you have to understand this thing, that you are and your team, whosoever is making any financial numbers, is actually a finance person. And here is an example. If you're hiring a team member, that is actually a financial decision. It is your cost versus benefit analysis. What cost is going to be costing, how much money you're going to be paying the person extra, not just the salary, but the other taxes, other things which are like hidden numbers. And on the other side, how profitable would business be if this person contribute to the business positively? Another decision could be like, for example, set a price of your service or product. You get it right, all good. You get it wrong, either you're making loss because every time you sell something, or if it's so high that you're not able to sell anything and you're performing under capacity. I think that's very much to do how your business operates, Mark, right? So this way, again, it is pricing decision is a financial decision, whether you are an accountant degree holder or not. You have to work out the number here. Whether to give a credit to a customer or not. Again, you have to understand the true cost of that money you're offering for free to a client for 30 days, 60 days, 90 days. Someone has to pick up the bill on that lending. Then buy or lease. This is perhaps the most asked question to any accountant. Should we buy a car or lease a car? Should we buy a van or lease a van? Should we buy this or lease that? Again, it is purely financial decision based on your unique circumstances. And this is why, again, whether you are an engineer, architect, or an accountant, it is as a business owner, it is a financial decision. So the bottom line is more profit decision than loss decision equals to good year. And other way around, if you make more bad decision, loss-making decision, then a profitable decision is a bad year. So bottom line is, you guys, whether you accept or realize that or not, you guys are financial people in your business. And your accountant is usually helps you with compliance. Compliance is filing the tax return with HMRC, filing the accounts with HMRC and company's house. And usually that also happens after few months of the year ended. So effectively, all the important decisions a business needs to make are made on a gut feel. I mean, I'm open to hear like if any of you guys have done a proper number counting, number crunching, saying, okay, this is what we do when we have to hire a person. This is how we manage our cash flow if we are doing for credit on to one of our customers.
Again, I've done one or two things in
That's
that
right.
area, but certainly not as much as I probably should do.
Exactly.
I have
Exactly.
recently, for the first time,
Yep.
asked my accountant to really make me understand
Yes.
every hour of cleaning that I sell.
Yes.
You know, what do I need to take account of? So employers, NIC, uniform, holiday pay, and for the first time in years, he's made me realise that I need to sell at least a cleaning hour for X,
Exactly.
obviously a penny of profit. So it's just after many years beginning to dwell on that.
100%. And
Yeah.
this is a very thing, like people keep on working without realizing where actually they're leaking money, where there's losing opportunity to make more money.
Yeah.
So as I said earlier, no one teaches you this thing. Not schools and not HMRC will tell you guys you can increase your profit by doing this or that. No, they only need to worry about one thing when you're paying the taxes. So there's some real life example which probably you guys can relate to. So I took an entrepreneur. She was actually running a business, hotel and restaurant industry. And when I asked her how she does pricing, most of her pricing was done based on the copy pasting the menu of our local competition. Whereas the local competition was a kind of a huge business having multiple restaurants. So they were able to manage, keep the prices low, and kill pretty much every other shop in the local area because they were not able to compete with them. Usually, restaurant businesses will have 65% on average gross margin, right? Gross margin, not the net, but gross margin. She was only at 31%. And then you have overheads of running a restaurant like staff cover. You have all the other things going on, electricity, rates, whatnot. And she was literally a few months before she was going to close the doors when she called. And then thankfully, we were able to see exactly where those things were missing. And we were able to increase our prices without losing clientele, or I would say diversifying the clientele because we created a niche within that industry, within that area. You don't have to fight over same fish and chip if you package your deal in a different way, charge more money, and make more profit. Then we have another like software developer. This is where really sad story. Created a software system, gave it to one of the clients, and the client disappeared. 42 grand disappeared just overnight. And that on his margin of 20% net, he had to make another sale of £210,000 to recover that loss. So before we go to the next section, any question about this section, the first one, which was about that you guys are the people who are financial people, and you have to make sure that you do understand all these things going forward.
I think the trouble I have, if I'm being honest, is I haven't got to that stage yet where I'm charging for my services, right?
Yes.
But I can already see that I would easily not charge enough or charge too little so that I can try and build up the business.
Yeah.
But then that will then set an expectation for them when people want to then, if I want to then build on that, it's already set an expectation.
No, no,
So I can
yeah.
understand what you're saying in terms of you have to be a finance person because you need to understand all of that. But it's like, how do I understand like my service versus my instruments, how much I've paid for that, how much it will cost me to get to places? Like, it's a lot to have to manage, but I understand what you mean. It's like you should start tracking that from the beginning.
Exactly. And it's more difficult for yourself because you're a service-oriented business, right?
Yeah,
If
exactly.
you were selling fish and chip, or I don't know, if you're selling any service which has direct costs involved, it is still easier.
Yes.
Suggestion to you would be, this is what I would do, and I've seen many guys doing it, being successful at this one is,
Mm-hmm.
I would say don't be the cheapest one in the market, don't be the most expensive one in the market.
Yeah.
And then basically what you do is you give an like kind of as a opening discount or opening offer, like my first pipeline's X percentage for you guys.
Yeah, okay.
Right?
Yeah.
And usually after every 5 clients, bump up the price. Every 5 clients, bump up the price. And the thing is, the reason is two reasons. Number one, you are becoming more experienced at what you're doing.
Yeah.
Right? That's the most valuable thing.
Yes, it's true.
And the second thing is that when you start doing this one, you will see where exactly that sweet spot is. Like, no, you won't keep on going to like, no, 200% like this way. You probably hit 20, 30% up from your starting price. And so this is the price point where you are getting good sales. And this is another thing, like you will be only person offering this service.
Yeah.
So you can't multiply yourself overnight. So you have to make sure that you're getting paid fairly.
Yeah.
And that sweet spot needs to be, found using this kind of methodology.
Yeah, that's a good shout. Thank you.
So yeah, it's something like done seen people doing in the past and getting away, decent prices for their services. So next is we're going to play a game here, right? So guys, it's a very interactive. So just put in a chat if you guys can realize what exactly is this about. So the game is called, what scorecard is this? What game is this? And who's winning, who's losing? I think a few more guys have joined us. Guys, you can also take part here. We are keeping it very interactive. Hi Raj, hi Santu, hi Magan. Yeah, give a shot. Put in chat whatever you think if you can't if you don't want to speak.
I have no idea. Darts?
Okay, that's one thing. Mark?
No, again, yeah, I've got no idea.
Okay, no worries. That's fine. We go to the next one.
Yeah.
This is fencing, by the way.
Fencing. Wow.
Okay, this one. So we know US is winning 2-0. Well, what is the position of the game?
Football?
American football?
Any other?
Basketball?
Yep, it's basketball. That's fine. What do you think it is about, like, who's doing how?
The US are winning. Have won.
Okay, no worries. You got half a idea what exactly is happening about here, right? And what game is this? And what's happening there?
It's the World Cup.
That's
Yesterday's World Cup.
Yes, match, yeah.
Right. So you guys see how quickly you picked up on the scorecard you knew. You know the position, you know the shots on target, you know every single thing about the game without even thinking about it.
Yeah.
And the funny thing is, your business also has a scorecard. And that's called your accounts statements and financials. And this is what I want you guys to be good at without even looking at what happened or not happened. Just look at the numbers. Oh, this has happened. This could have happened. And it's not too different. The bottom line is this: when you start to convert that one, so possession is like your cash position. More cash you hold instead of your stock or instead of your debtors is better position for you. You can use it, pass it into any direction. Goals, your net profit. Shorts, your pipeline. Passes, your conversion rate. Yellow cards, slow debtors, slow stock, dead stock kind of a thing situation. So next time you see it, always understand this thing. If you cannot read the scorecard, you cannot understand the game. And you cannot understand the game, you cannot win the game. Means you will be staring at many people stare at their own accounts as if they were staring at the fencing scorecard. Totally clueless. Only thing they were saying, there's a sales, and that's the profit. Nothing in between what's happening or not, where they can improve on, where they can basically, make changes to get it better. So going forward, make sure that your scorecard, your accounts are you understand them. And when you say my accountant does the finances, it's not your accountant does the finances. He's a scorer. Person sitting in a room somewhere, just doing the calculation, adding up, deducting or whatever, and showing the numbers on the scoreboard at end of the game. You are the people who are actually scoring the scores, losing or gaining the possession.
So the accountant as well.
You're in business, and that's the thing. This business is money. You like it or not, the moment you start business, you're responsible for every single thing you're doing. So your accounts and your financial statements, and this is the reason you need to understand, they're not just for doing your accounts and taxes, which is legally important, but you will see what else is going on in there. So first important thing is keep the accurate records. If you don't know where the money is going, where it's coming in, thank you very much. I think there's no point of doing what. It's just kind of how you're just monitor key performance indicators. Now, this could be like your capacity. This could be like your cost per acquisition of customer. This could be your billable hours. This could be multiple things which are very important to make sure that we give you the health of your business just by looking at that number. In your car, you have 3 or 4 different gauges. It immediately tells you what the fuel is sitting in there, how much speed you're driving at, heat, revs, whatever, to make sure that you are getting the most optimum performance out of a car. Business is no different, as long as you know what you're looking at. Financial position. End of the day, when all is said and done, that's what number comes out to be. After 10 years, 20 years running the business, how much wealth you've accumulated. Maintaining working capital and cash flow. That's most important thing on a day-to-day basis. You need to pay your bills. You need to pay for staff. You need to pay for your bank overdraft, whatever. The moment you stop paying, the moment your business dies. Simple as that. It's a bankruptcy if you can't pay any bills of your expenses. Borrow or invest in the business. Many people come to me for funding, which is good. But when I look at their statements and the bank account and all these things, they are in a shape that anyone will run away from those companies. Forget investing or giving money on a loan from the banks. Strategic decision making, whether you want to expand, you want to create a new service, add additional products, change service to diversify somewhere. You'll have no idea if you don't know the numbers. And not only 10% is your compliance being what HMRC wants from you. And there too, only want two things: your accounts and your balance sheet. They don't want your cash flow because they know if they ask for cash flow, many businesses won't have cash to even pay the taxes. Compliance is important, is legal obligation for any business owner, but it's about 10% of what finances can do for your business if done right way. Some real life examples here. And you probably will know, Hardeep, what happens is in the UK, when you are running a business, once the year ends, you have further 9 months to report that to the HMRC, your company's house. And most of businesses done the whole year. 3 months down the line, they ring accountant, we need the accounts done. Another couple of months before accounts are done, 5-6 months down the end of the year. So 12 plus 6, nearly 18 months after, 16 to 18 months after the year started, people know the results, what exactly has happened or not. This number, depending upon your business, I would usually say should be weekly number. Every week should know exactly what's happened in the last week. For a smaller business, you can get away with a monthly, but anyone who's doing something decent, weekly number is the number you need to be looking at this one. So there was that the guy was thinking he's tracking 140,000 pounds. But where it's come out to be like it was actually tracking 120,000 pounds after when the numbers were done. And no one realized that the certain costs have shifted. And especially what has happened over the last 3-4 years, the base costs have gone a lot up. The revenue has not gone as high as the costs have gone high, crunching whatever profit you could make for your own business. Many businesses had to borrow extra money just to stay afloat. So the bottom line is this: your accountant simply records the events and give the results to you. He's doing the right thing, what he's supposed to be doing. But the bottom line is it is your results and you're doing, you need to own it. Before we move to the next section, any question up to here? Sorry. I hope it was pretty clear looking at the scorecards, what exactly is happening in real life. We watched a 90 minutes game or 120 minutes last night, but we know every single thing. And what we do on a day in, day out basis, we have no idea about it. We spend 8 to 10 hours in our businesses, starting out 14, 15 hours, but no idea how its performance is happening. So here are the 5 numbers that you need to make sure that you understand them. Sales and the revenue, you need to not just looking at growing or declining, also need to see other matrices it can be divided on. Could be region, could be product. So how much each region. So example, if you have 3 regions, north, south, east, west, whatever, you need to know exactly by region, which region is doing what. And I'm going to come to that later on why it's important. Sometimes some regions are actually cannibalizing your profits. It's more costly to keep that going, and that eats up into profits of the regions which actually are making money. On a bigger number, you're thinking you're making money, which is fine, probably making 100,000 pounds for argument's sake, but you don't realize that it could have been 150,000 pounds hadn't we been kind of financing the loss-making region or a product or anything. Shut that product down, shut the region down, literally your profit goes to 50% higher in this example without doing anything, just by shutting down the operation on one side. Gross profit margin. Now, this is something is more important for the businesses who have any product to sell. Understand what you're buying things at. If your cost of sale is going up, you need to reflect that in your pricing as well. Yes, there is always some margin. You have to bear a little bit, but if you keep on going for long, you probably will not have money to pay for rent, salaries, and other important bits. So therefore, very important to keep an eye track of your gross profit margin as a percentage. Operating profit. Now this is, I put a star here because this is the number I usually go for and look for. And I'll explain you why as well. Gross operating profit is profit from your business services. So this would be like your sales minus direct costs minus cost of running that business, rent, salaries, expenses like motor expenses, whatever. The bottom line figure comes out from here is this money we can use to diversify, reinvest, and that's where it is very important. And the second thing is usually as a kind of like, you know, as a rule of thumb, your cash position should be equal to this number. And if your cash position is not with this number, then there's something, warning signs are happening here, like, you know, something is not coming right. And again, I'm saying this is a rule of thumb because it applies to most of the business, but not all the businesses. Net profit after taxes. This is what the number you need to look at, what actually you can take home for yourself. And sometimes I'm very, very upfront because this thing is, my job is to give the right true picture to the businessman. If the owner is not making enough money after this number, then it is a serious question with the person. If you're doing this business for your lifestyle sake, or you are doing this for making money, especially if that person can make more money by just doing a job somewhere else. But again, in business, life is not like a straight line. Sometimes this is up, sometimes it's down. As long as there's a strategy behind it, even if it's a loss, we know we're going to take a hit this year for a very good reason, because there's a big investment done, and the fruits of that will be reaped in the coming weeks, months, years. And the next one is current ratio. This is the cash flow ratio. So the very simple thing is that if you owe the market £1 to your creditors, to the bank as an overdraft, loans, short-term loans, I should add on that one. Your creditors, if you owe them £1, you should be in position that you can recover £2 from the market. So that the ideal ratio is 2:1. Anything below that, most of the bank will not look you as a worthy person to give money to, or your business is a worthy business to give money to. More than 2, happy days. So what does that include? The simple thing, whatever your receivables divided by your payables, the number should be 2 or above. And when we want to go for a loan investment, like that kind of thing, we first of all look at this number and make sure this number is in the right direction. So the KPI dashboard I was saying to you earlier, this is what it's going to be looking at. So again, a couple of examples: sales per employee. So if you're employee heavy business, you need to know what sale per employee is coming out from your business. If you're adding an additional employee, is it increasing that or decreasing that? Second could be cost of acquiring a customer. Mostly to the businesses who are doing social media advertisements, spending a lot more money in marketing. It simply means how much money you have to pay directly to the advertiser or indirectly to acquire one customer. And if the cost is not within the total amount you're going to be making out of that client or customer, profit wise, then you need to understand, you need to cut down on marketing or maybe look for something else which actually works for you guys. I'm going to be sending out this spreadsheet to you guys. So it'll have a couple of on that already done, and then you can add additional in that spreadsheet. There will be about, usually I say should be up to 5 KPIs at any given time. 2 of them your main KPIs, and 3 you can have any based on your situation. And those 3 should keep on rotating as your business life cycle or business situation changes. And actually, when I was making this webinar, there was so much of thing that needs to be discussed. I thought, you know what, it looks like it's not going to be able to do in 1 hour or hour and a bit. We need a lot of time to actually explain each and every number, and especially help you guys, taking you step by step. Like, for example, we discussed about 6 or 7 different things your business accounts needs to be doing. What exactly in bit more depth. KPIs, what the formula is, how you need to know. So those kind of things I was thinking, you know what, I need to have more time on that. And this is just kind of like as I say, I'm just want to assess, like, if you guys are interested, you can scan the QR code here, and you can send me a message, and I can then see if we can arrange this webinar. It's going to be slightly longer because, as I said, over 3 days, 2 hours each day, and we're going to go through 3 different key elements in depth so that you guys can understand exactly how it will apply to your businesses. So feel free to scan the QR code. I'll leave it on for a few moments. Or I should do this one. And righty. Right. The third thing, when people make a sale and they think they made £10,000, and then they think they're £10,000 richer, and they have got £10,000 in their pocket to spend on something else. Could be anything. Could be business related. Could be personal stuff related. And they think that it is actually cash sitting in their bank account. It is not. Profit starts showing up in your accounts the moment you write an invoice. The cash only starts showing in your account once the customer or client pays you that money in your account, and it is sitting in your account. The two are not the same thing. And the thing is, your business can survive for months on losses, but you can't open a door of your business next day if there's no cash in the business. Therefore, cash is much more important than the profits are in short term. And long term, there's no long term without cash anyway. In long term, profits are also important. You can't keep on going for losses forever. So as I said earlier, every penny you did not collect from your debtors is a loss, not a profit. The money could have been in your bank account. The money could have been employed to further the business, to make more investment in the business. If nothing, it will be at least earning you some interest in the bank account. And this is what I was saying, to sometimes you can be profitable on the paper, still run out of cash and declare bankrupt. Cash gets stuck in these things, in the stock, in debtors, in bad planning and decision making. So therefore, it is very important for you guys to make sure that whenever you guys are actually doing business, you're making sure that you are collecting the cash within reasonable time period. So therefore, it is very important to understand the difference between profit and cash to make sure you can control these two things. So this is an example, a couple of examples, like a wholesaler, profitable on the paper, £300,000 profit for the year. Accounts are showing £300,000. The tax return is showing £300,000. However, the bank account only had £120,000. The additional 180 grand was stuck with debtors, and the guys have to borrow money from the banks at ridiculous amount of rate to pay for wages and stuff like that. And it matters a lot, especially if you have a heavy operations business. Service business. So this is business, they supply staff to on events. In December, they had £50,000 additional invoices. Great. But the money didn't arrive until February, March next year. So for the 3 months, they were sitting on debts, collecting drip by drip from the debtors and paying for their expenses and whatnot. Because you have to understand, they hired people on behalf of the client. They have to pay those people pretty much straight away. Whereas the money didn't hit their account until 3 months after that. So again, the timing difference can also cause issues with the cash flow. Another real life logistics business. £320,000 need to be paid in 10 days, only with £148,000 sitting in the bank account. Unfortunately, these guys missed that altogether, hitting them really hard on the credit ratings and further how they can borrow money or not from banks and like that. So therefore, it is very important to make sure don't rely on accounts on this situation. You need a cash flow forecasting statement to make sure that you are covered for next at least 3 to 6 months, depending upon your business cycles and what sort of business you have. So to give you an example, if you get stuck with £10,000 with a debtor, you have to do additional £100,000 of sale at 10%. This is actual reality. And HMRC is not going to take that until certain time. 6 months is a time limit before they actually call them bad debts. So in that way, you have to pay the taxes as if you made a profit of £10,000. And then next year when you do a resubmission saying that you lost at £10,000. So double impact, cash flow impact, as well as profitability impact on that one. And honestly, it is not a nice place. When people lose money, it is disheartening. And you have to, I've seen many businesses going out of business just because they had a massive impact on their collections. So in a football analogy, I think thinking yesterday, for example, you hit a goal, but then VAR showed that it was offside. This is what happened between when the cash is not collected and you start celebrating when the ball is in the net. Any questions so far?
One question from me, if I may. In terms of gross margin and net margin,
Yes.
Is there a sort of magic formula, or is there a given percentage that one would say in any business, you know, your gross margin needs to be at least X and your net needs to be at least X?
It means there is an industry, not in business overall. Some industries are very, very profitable. As I said, in food business, in restaurant business,
Yeah.
you buy potatoes for 20, 30 pence and sell them for like £3 or £4 these days. Right? And that's why the gross margin there are nearly 66 to 75%.
Which is
You
quite
look at,
high.
yeah,
Yeah, which is quite high, so say compared to commercial cleaning, which
exactly,
would be about 40%.
exactly. And this is where usually we say it about, you should look at the industry, no, and there should be I'll share with you a link. You can go in that link. You probably see the benchmarking of the industry level, and HMRC actually look at that thing as well. So sometime when businesses are trying to be over smart and they over report these things, that's when that letter comes through the door.
Yeah.
So yes, I will share the link with you. I'll just make my note here. Benchmark cleaning businesses. Lovely. Another good thing to look at is if you have any company in your industry which is on stock exchange, they will have everything open. Obviously, they'll have a better gross margin because they will be having a lot more volume buying. You can give a 5%, 10% margin in there. Right. So so everything so we would just discuss about this thing that cash is the king. And that's why make sure that you never think that if you made a profit and that's done, it's not done until you have the cash in your bank account. So these are some real life examples of my clients. So Hershey, they were in FMCG fund import business, scaled 1 to 4 million and built a commercial property portfolio. Their warehouses, all these different locations they have now. And everything was done looking at the long-term objective, which was generational wealth for them. Jane, single parent. She had 2 properties when I met her. And now she has 6 properties and decent enough income coming through those rentals. It is not a passive income. And I don't know, people sell this idea of passive income that you have nothing to do. That's the biggest sham. Every kind of business needs some effort. Some businesses have more effort starting out. Some businesses have less effort throughout it. But there's always some effort going through from the person who's running the business, whether you hire an employee to do that or you do yourself. And the third one is online retailer, 230K from year 1 to 1.32 million in year 2. And to share with you, obviously, I requested them if I can share their information, but without their any names, obviously. That's their actual P&L. We looked at a few things, changed a few things, played with the product profitability, what was working for them, what were not working for them, which platforms were profitable, which platforms to sell online were not really profitable. Every single row in there, your purchases, your cost, the labor and material is actually your FBA cost. Everything was kind of looked into which was the most efficient way to increasing the business and lowering the costs. And this has been submitted last couple of months ago, actually. And what I want to highlight is most of my, as I said, like they want to invest their funds, and this £480,000, if you see sitting, the second last number from the 315 above. Let me just see if I can mark a number here. Can you see the number I just highlighted? If you see, this is the cost to the business. From £571,000 gross, it reduced it to 29,000 net. Massive tax saving there. You know that the tax rate is about 20%, 21%. This about 25% above this rate. So nearly £120,000 worth of taxes saved with this HMRC approved fund. Directors, £240,000 salary, 2 directors, husband, wife, 12,000 each, and then some dividend. That's their you can imagine whatever the tax is, small tax they have to pay on that one. And the most interesting thing is this money is sitting back in their account. They have bought recently, like they have started going to China and started to import from there directly now for their online business. And every single thing of them has been put back into the business. So effectively, the money goes from their P&L to a trust and then back from trust into the business as a loan. Let me just get rid of this one. Yep. Right. So whatever I've shared here with you is basically based on my 25 plus years of experience with various businesses in various industries. Whether you're selling bananas or Boeings, the fundamentals are same. You buy for less, sell for more, and you keep the margin. Most of business people, first of all, do not understand finances. They themselves make themselves handicapped, saying that I'm not a finance person, I can't deal with this thing. So they have a belief altogether to start off with that they're not good with numbers. That's the first thing you need to shift in yourself. You can do the numbers. Number is the language of your business. Your business is telling you day in, day out things to improve it. Only thing is that you need to understand and learn from there. Secondly, accounts are a lot more than what we do on a yearly basis. Based on your business size, based on your business model, you should be looking at this number on a weekly basis. And finally, once you have those, make sure you have a dashboard that you can then make most of whatever you got money sitting in there. We were able to we were able to invest that £480,000 because we know that this was coming up. Had we known that this one after the event had happened, after the year end, there was no way we could have stopped that from getting taxed at 25%. So this is why it's important to understand that these numbers can impact. Now imagine £120,000 additional in your business. What impact that will make to your overall operations. £120,000 could be 3 vans for you, Mark, maybe? Without any issue, 3 full-time staff. So it's not a small amount we can save here by making sure that we are understanding the numbers, how to play with the numbers. And finally, making sure you have those information to your hand when you are making decisions. Okay. So right, I think we are coming towards the close of this one. So just very quickly, it was first ever webinar. Quite a lot to learn how to use the webinar presentation and all these things. So it'll be very helpful if you guys can leave a quick review or feedback to my email you're getting emails from. And as I just be showing up here, I will also be sending you away along with the KPI dashboard template. I'll be also sending you away a 12 months cash flow template you can use in your business. And I really hope that actually helps you guys with your business and making it more profitable. And honestly, tax is the least of worry when you have a lot of money. Most of people are not able to afford the expensive tax advisors because there's not enough money to go around anyway. That setting up that tax structure was about £4,000. But after paying £4,000, they saved £120,000. And as always says, own it. It's no one else's business, it's your business. You need to own it. That's your baby. Like, our business is our baby. No matter how difficult our children are, we have to understand what they're saying to us. We can't leave that to nanny or the school teacher or whosoever. Right, guys. Any questions or anything? Any comments?
No, it's very helpful. Thank you. And it was also helpful for me to listen to Mark as well. So thank you, Mark. It was good to hear your kind of like real life examples.
Yeah.
Even though it sounds like what we're both doing is very different, it was good to hear that. So thank you.
Yeah, thank you.
Yeah.
And I found it's enlightening.
Yeah.
You know, it's just made me more adamant that I need to spend more time. We all know what it's like running a business. You're wearing 20 different caps every day.
Yep.
And you sometimes can't see the wood for the trees.
Yep.
And finances, especially because if you don't like finances, and I don't like finances, then it's almost an excuse just not to dwell into it.
Yeah.
But I think you've made me realise more than ever that you can't ignore them. You've got to look at them more than once a year. I do look at them once a year.
Yeah.
When you have your annual accounts produced, but it makes me realise that I need to look at them in more detail. I do look at my sales and by sector on a monthly basis, but I need to look at my accounts in more detail. So thank you for that. It's been
no, 100%. I think for you, Mark, especially because your business is a lot more moving parts. For your business, I would definitely recommend a decent accounting software, if not ERP.
Yeah, I mean, I'm using Xero.
Okay.
But the sad thing is, I don't really understand Xero.
Yeah.
It's just something else that one needs to learn. And therefore, you have this wonderful dashboard with all these pretty pictures and numbers, but
yeah, I mean, if you can't use it, it's a useless thing.
I've got to be honest, and I probably don't understand more than 5-10%.
Yeah, no, 100%. So I think it'll be a good idea to catch up maybe afterwards, because there are certain things you can do with Xero as well.
Yeah.
So, like, no, if you're using it in-house or your accountant is using it.
We're sort of both using it. Obviously, they do.
Okay. So you can ask them to be modified, or there are certain things that can be done in Xero. But when business reaches a certain point, I usually ask my clients to use ERP. Now, ERP is a lot more than just simply accounting. It includes your stocks, it includes your orders, includes your pipeline, includes your marketing within one system.
Oh, wow. Okay.
So like it will give you an idea exactly, especially if you're looking at cash flow, what is your pipeline looking like?
Yeah.
And based on your previous performance of conversion rate, it will give you an estimate of converted value as well.
Yeah.
So if you have 100 clients sitting on your pipeline and you know that the conversion is 20% at £300 each. So it will say you the expected cash from this pipeline is £6,000 value of this pipeline. And that will feed back into your accounting system.
Yeah, of course. Yeah, no, it sounds like an interesting system.
Yeah, no, that's there are a few of them and there are some certain ones which are really good for SMEs.
Yeah.
Brilliant. Thank you very much, guys. Thanks for.
Thanks, Marty. Nice to meet you.
Thank you. You too.
Thank you. Bye.
Thanks. Bye.
Bye. Thanks. Bye-bye.